The Australian Foundation Investment Company has been around since just before the Great Depression, so it tends to take a rather long-term view of things. Understandably, this year's results didn't exactly shoot the lights out, with both its profit and portfolio returns taking a hit, but it's still in the market, buying up where it does see value. I spoke to AFIC's Managing Director Ross Barker, who says he hasn't seen things bottoming out, but at the same time, he's not about to panic. Well, Ross Barker, if we start, net profit for the year down about 6%, portfolio returns down close to 5%. What's driven that result?
Well, last year we had a big increase in our profit because we participated in the BHP buyback, and they didn't have that this year, so a bit of that retracement was because that was absent. The portfolio, as you say, was down about 5%, but the broader market was down 6.8%, so we were happy to have a bit of outperformance against the market.
AFIC is, of course, traditionally one of the first companies to report in the reporting season. Is this a sign of what's to come over the next month or so?
Well, it depends which sector of the market you're talking about, but there are quite a few companies who have been flagging that revenue is hard to get and costs are increasing, so that's been a bit of a squeeze on quite a few industrial companies, and we'll hear how bad it is when the reporting season comes around.
How bad is it? Your company's been around in various guises for more than 80 years. Is this the most challenging trading environment you've worked through?
Me personally, probably, but if you look back over history, as you say, AFIC's been around about 80 years. They had the aftermath of the Depression and the Second World War, which I think would have been pretty challenging. Then there was the 70s, the mid-70s, where we had stagflation, very high inflation, but not much economic growth, and that was very tough with high oil prices. Then after the stock market crash in 1987, we had another period of 4 or 5 years where the market really went sideways, and we're now in an environment where there are quite a lot of negative feedback into the market from the difficulties in Europe and the US and the high levels of sovereign debt. And to some degree, every situation is new. People always say, well, it's different this time. But there are always challenges in the market. But that's a particularly big one because in Europe, at least, nobody can see a clear path out of that sort of accumulation of debt.
Looking at your portfolio over the last year, you're more of a buyer than a seller. Does that indicate that you believe stocks are cheap at the moment?
Well, I think on a long-term picture, we do think that market's fairly cheap, but we are in an environment where equity investors are very risk-averse and they're not willing to pay up. We have been buying, as you say, but we did have a convertible note issue in November last year, and we've used those proceeds to top up selected companies that we think look interesting over the medium to long term, and some of those are a bit contrarian. For example, we did buy some Woodside, and energy has been a bit out of favour in the last year, but we think, well, from a medium to long-term perspective, that's an area where we want to maintain it.
Looking at the broader market outlook, we saw those precipitous falls around the time of the GFC. Of late, of course, the market's been more or less grinding along the bottom. Do you see that situation continuing?
I think our view would be that it will continue for some time. We've been in a range of 4,000 to 5,000 for 5 years. In fact, the market really hasn't gone anywhere in 5 years. And that's just a reflection of the great uncertainties in economic growth in the developed world. And we think that'll be challenging for a time. But in the midst of that, we're a long-term investor. We're not just focusing on the current situation. We're looking forward 5 and 10 years and trying to assemble a portfolio of quality stocks that over that sort of time period should do well.
Is there a bottom in sight? It's a $64,000 question.
That's right. Is there a bottom in sight? Well, these things always go in cycles. I think to call a bottom, you really have to see that there's been a change in sentiment in the market, and we're not seeing that yet. Foreign investors aren't particularly keen to come to Australia with a high dollar. Local investors are very risk-averse, so I'm not sure that we're there yet, but I think this pattern of trading in a range will probably persist for a while until some of those uncertainties have worked their way through the system.
In your outlook statement released to the market, you quoted the uncertain political situation as depressing both investor and consumer confidence. Do you see that situation improving, though, anytime soon?
Well, it is really a reflection of the fact that with the minority government in Australia, policy formation hasn't been very predictable. Investors don't like uncertainty. We've had all this debate about who's going to be the Prime Minister and what's going to happen. So none of this helps investor confidence. So as as there's more clarity about, the political side of things, I think that would help the market, but who knows?
But really, at the moment, we're going to continue with this minority government and seemingly daily controversies. Not good for business in the next year.
Not helpful for business confidence, not helpful for consumer confidence. So, yeah.
Ross Barker, thanks for your time.
You're welcome.